morning to all traders and welcome to this week's first Market Insights video. We're going to talk about the US index and also S&P 500. There's been interesting developments over the weekend. There was an attack in Saudi Arabia oil installation. So production is down, risk appetite is increasing. Does this really mean that the S&P is going to go high? Also, we have the FOMC decision this week. It's going to be very critical for the dollar. Let's see, is the Fed going to turn dovish? Is until then the US dollar index going to go down? Well, it looks like to me that technically speaking, the dollar index is a little bit bearish, while the S&P 500 is a little bit bullish. So let's see if this is going to be supported by the geopolitics, politics, and economics. So starting with the US index 4 hours chart, what we're looking at here potentially is have a expanding flat, okay? So we're really looking at this now as this, okay? We've got the WXY, ABC, and we're looking at 1, 2, 3, 4, and 5. This is going to the expanded flat pattern. We ended number 5 here, so W, X, and Y is what would actually give us this pattern. Now, that means that we're expecting a impulse correction to the downside, impulsive, reactive, let's just call it, to be more precise. That could literally take prices even down to 91 or so levels, according to Elliott wave theory. Of course, if this doesn't turn out to be the case, we should be looking for a more complex pattern, which we are going to analyze, well, as time goes past and as the structure of the market suggests, as always, of course. Now, let's go to the S&P 500. We're looking at the 4-hour chart here. Okay, the S&P, I'm a little bit more cautious now, to be honest. So we've got this wave 1, okay, and wave 2. I'll look at it as that, as to be more precise. We've got the wave 5 ending here, and we'll have A, potentially B, and potentially C ending here, right? Which means that these could turn out to be an expanded flat correction, okay, and C would obviously go way below the 23.15 level. Okay, now that would be an ABC, and we should be looking at 1, 2, 3, 4, 5. Now, as long as we are below 30.23, that is still the case, okay? But because of this latest move, okay, and that upside move that looks quite impulsive to me, I'm now a little bit more cautious, and I think that what this scenario could be is that this ABC could actually have ended over here, right? Which means that we're now heading for a new wave up that is completed 1, completed 2. We're now heading up for wave 3 and then 4 and 5. So within this one, we have 1, 2. So we're actually literally going for wave 3 now, okay? Which is also within the intermediate cycle, okay? 1, 2 is done, and we're waiting for wave 3. So if we're back above 2036 and we'll go even higher to 31.08, then we're looking at wave 3. Now, if prices stop right here, we're still looking at this becoming, being a B, a corrective wave B, which would support the first scenario, okay? That would be an expanded flat, of course, as I showed you a few seconds before. Now, with that being said, okay, these structures would also change. Some impulsive move over here, for example, that could become an A, B, and a C, which is expected, okay? At the same time, since we are moving on this Elliott wave triangle here now, and we broke above that level, we had 1, 2, 3 that ended 30.23. I'm expecting a short correction a little bit lower, or might even not have as a deep correction, and then move all the way up to around 3100 to complete wave, the last impulse move. Now, then from here, either down and up, or we're gonna break down and move all the way to the downside. Of course, there is successive levels that we need to break, 29.50, and then 28, etc. So this would be for the day. I hope that is helpful, and I will pay, of course, a very close I'll pay very close attention to what happens with the situation in the Gulf. Saudi Arabia attacked, were attacked, oil production fields were attacked, and that is affecting the price of oil, but also, of course, risk appetite. Thank you, and as a reminder, I would like to remind you to visit our blogs where we cover the latest news, provide trading ideas and other necessary tools traders need.